Hey everyone, welcome back to Mitchell Markets. Today we're just kind of doing a market update, doing a little debrief about a few of my positions that I had mentioned in slightly earlier videos. And we're going to start off here, we're going to go into Amazon. Like I said, guys, I traded Amazon, one of my best trades of the year. It was a great trade for me. And people were probably a little curious why I closed out my Amazon position here. I took my profits. I didn't think Amazon was going to go much higher. And I specifically said in that video that we need to fill this gap here. There's tons of orders and stuff that we need to fill in here, and the market has a way of correcting itself before moving higher. The market shakes people out. So I had taken my profits and I had mentioned I am going to look for this gap to be filled and I'm going to re-enter and trade Amazon again. So that's still my plan. I'm watching Amazon closely, looking and reevaluating entry and support. I think support is going to be around the top of this candle after we get filled. I think 230 is going to be a good support zone, 224 to 230. And I'm going to show in this Fibonacci. We're going to check it out for swings, and we're going to look. And exactly, just as I had suspected, I think this 230 range, 229 right here, this is going to be a perfect entry for me personally. This is what I'm going to be looking for, somewhere between 229 and 234. And in this market, I am doing very outdated options, guys. I am looking months and months out. And I am very deep in the money when I'm getting contracts. In case we do get this cat bounce, if news comes out, maybe some macro stuff, some headwinds calm down, and I'm gonna still be able to profit off those bounces and close out my position and look for re-entries. So this is a smart money mix where I'm mixing weeklies, essentially day trading plans, while also mixing in swings and long-term investment plans to kind of do synthetic stock plays with my option positions. Just in case the market does downturn, I'm not going to fret. I'm not going to get shaken out like a lot of these people are getting shaken out and losing money. So we're not going over our head, but we are making smart, conscious decisions on entry. And if you do that, you can hold out much longer. So I'm going to be looking to enter between 234 and 229. I'm going to be watching price action. What I think will happen for my ideal entry, we're going to get this EMA 100. It's going to move up to the 618, and it's going to be a golden zone with the EMA 100 adding support to the 618, as well as that gap being filled. And then I think we can start to move back up to the all-time highs around that 260, maybe push up to the 280 range. So that's what I'm looking for with Amazon. I'm going to be going in multiple contracts, and they are going to be long dated option contracts well into the money, just in case, like I said, we get that pop. I want to be able to profit off of that, instead of getting a pop and the stock price rises $15-20, but because I'm so far out of the money, I want to be able to profit on that. That is what I'm trying to avoid. So in the money, popping off of this zone. So that's my Amazon update. Now let's go take a look into Meta. Okay, Meta is going to be a slightly trickier one. Long term, Meta is at a good buy zone. As you can see, we had filled this gap from months ago, retraced down to the 618. I played off of this gap and retracement. Already did one play, was into the 630s, and I closed out my position, and that's why I had a long swing on Meta. So I had a contract almost a year out for Meta, and I was prepared to hold it long term, but because of that pop right off the bat that I was anticipating, I was able to close out my position, and being so far into the money, I was able to profit well off of that trade. So I wanted to set myself up for defense and a synthetic stock play, but also being able to profit off of a short-term bump, which I was anticipating bouncing off this 618, and after this gap being filled, got some orders coming in. And now, as you can see, Meta has fell back down, and there's a couple key things to keep in mind here. We still have a gap from months ago that has not yet filled, and that is right in line with this 786. So this 548 to 560 zone, I am very keen on Meta. I am looking for a retracement down to this zone, and after a retracement down to this zone, I think tons of money is going to be moving into Meta. I think the market currently for tech and AI is taking a little bit of a turn short term. I think it's going to come back up. I think some people are taking profits. There's some people that are slightly worried and being shaken out of the market, causing it to drag down a bit lower. So I would not be surprised if we seen Meta retrace to the 786 on the yearly, but I also wouldn't be surprised if we hold this 600, a key point for Meta stock price after this gap fill 618 and that 600 mental zone. I wouldn't be surprised if we hold that either. So I am sitting back, I'm watching price action for Meta, and I'm also watching what the rest of the market is going to be doing. I like Meta at this point. I also like Meta at this point. I don't think you can particularly go wrong either way. It just depends on your time frame. I was prepared to hold Meta for about a year in my contracts, but I just didn't need to, and I am totally ready to re-enter some long positions for Meta. Just watching, seeing how the market plays out. And this is just my opinion, guys. You don't have to listen to me. I have a great track record so far this year, and I'm going to continue to try to give honest updates on the market and explain in an easy to understand way what I am thinking. So Meta and Amazon, eyeing both of them. We'll see exactly what happens. I think if Meta broke down to 600, I would enter, and then if it broke down to the 786, I would also enter a larger size. So that's just an update on what's going on in the market. There's a lot of uncertainty, I would say, in the economy, but things are still looking okay. The market trend is still generally bullish, so you have to be careful there, and you also have to be careful. You don't want to oversize, but you also don't want to miss out on possible gains. So that's my Amazon and Meta update. Hopefully you enjoyed. Make sure to subscribe. Going to be going in depth into some other positions as well as some defensive plays and day trading.